Hey everyone, welcome to this panel. Let's hop right in.
Hi, my name is Renç. I'm the CEO of Giza. At Giza, we build financial agents that enable life better.
Nice to meet everyone. My name is Kevin Leffew. I'm with the Coinbase Developer Platform team. I'm a co-author of X402. I focused on Coinbase and known wallets and was at Replit for 2 years before Coinbase. So I have a deep background in Cloud AI.
Hi everyone, I'm Ivo. I'm co-founder of Alex, and we built a framework for personal AI agents that's soon be in your wallet, hopefully.
And Gemma is CEO of Battery, where code attributes to OLAS, which is a platform for earning and monetizing your AI agents. Specifically, they're autonomous, so the idea is that you own your agents, so you can go to video like.
Amazing. My name is Nathan Vandy, CEO of Outbound.credit, and we are building the credit layer for the agentic economy. I previously worked at DeFAI, where we tokenized 1.7 billion worth of under-collateralized credit, and that was for blockchain agents, and the efficiencies that you could get by providing credit to blockchain agents is in the multitudes. So excited to chat with all the attendees and participants here.
Amazing. A very diverse group here, a very diverse group. I love it. So the topic here is intelligence capital markets. That's a pretty new phrase. So what does that phrase mean? Is it DeFi with some smarter automation, or is it something deeper? I think it's something deeper. Let's get an answer starting with Renç. What do you think?
I think it's a great question to kick things off. I will try not to mention Visa at all in my answer, so this doesn't turn to like a shield bomb test regional panelist. We'll try to give you guys like intellectual answers that I think we have any credible panelist for. Intelligence in capital markets, I think it starts with defining what do we mean by intelligence. Because intelligence has been around in traditional markets for some time, but today that intelligence can finally act on markets. When intelligence is able to reason with markets, when it is able to, think with markets and force itself on the markets in a persistent way, I think that's where the intelligence becomes a multiplayer rather than just a tool. So I think it's important to set the stage with that. Today, where we are with intelligence and especially DeFi is that we have agents that can manage your capital for you with the policy that you set. There is the risk factor, there is the capital optimization factor, and there's the governance factor. The capital optimization part today is very much automated. The risk factor is automated to a degree with the policy that you set. And the governance factor is not automated at all, and we can discuss if it whether should be automated or not, or that can be something that the humans can always dictate.
Yeah, I'll try to add that. Yeah. From my perspective, there's also kind of like a clear architecture around this where we're using foundation models and we're using their advanced reasoning capabilities to ingest external context and then make trading decisions around that context. And so what's really critical in this architecture is the ability to call tools. So it's called function calling in the language model space. And so we need to enable these language models to access APIs, to procure external data, real-time market data, and then use their reasoning capabilities to make trading decisions on top of that.
One more thing I'll add to Kevin. It's also important to understand intelligence is a wide spectrum. There's like things that are super intelligent and things that are more dumber. And you have different use cases or different things in finance. And it's important to understand where like LLMs comes into play, where you can digest a lot of user intent, and where specialized models like as Kevin mentioned that are predictable, that are deterministic comes into play during financial optimization. So in the intelligence and capital optimization part, it's important to understand there's always a spectrum, and each spectrum serves a specific purpose.
Yeah.
So those are some great answers, and I would just like to zoom out a little bit to the philosophy. And there was this study, I don't recall the name right now, of how AI agents can generally change the direction of a company and generally remove the need for most businesses. Why? Because they essentially the purpose of most businesses is be an intermediary between some supplier and the consumer. So make some supply of something usable for the consumer and deliver it in a usable form. And I think the same thing can happen with DeFi in the way that agents can hyper personalize a DeFi strategy for someone, but the strategies themselves, they're not that personalizable. The automation though is, because it takes a lot of effort to learn what you need to do in order to fully optimize your portfolio, like know where the highest deals are, etc., etc. So the value in this automation, I think, is huge.
Yeah. Yeah. Very interesting points. I think to take it to some very simple definitions, as we said, intelligence is not a new thing. If we think about how we understand human intelligence, you have an intelligent human that they provide some kind of useful result. That starts to become some useful service because others think, oh, I love a result too. Let me try and emulate what's happened or just buy this service from this person. It coalesces then into a business. And so we see things happening similarly with agents. You have agents that are provided useful, intelligent outputs. Then the natural question is, oh, how can my agent do something similar? We start to see agents needing to find each other, pay for those services. How we decide which services we trust, which ones are going to do a big job for us. There's all these interesting questions that emerge. And then that starts to become an entire business. And I think another interesting angle is the ownership of that. We have all of the infrastructure in Web3 for those services to be able to be contracted autonomously between agents on chain, and even for the agents themselves, the becoming successful businesses to be tradable in themselves. You can go and acquire an AI agent business. You have the NFTs, you'll own it in the same way as you might have acquired a company and you have the company register or something.
Yeah, just the last dialogue and the really good support you were saying about how Web3 crypto opens up the rails for this intelligence to become more commodifiable and composable. One of the big parts of the intelligence capital markets is democratization, where previously being able to get access to wealth managers was reserved to the wealthy few. And now we have intelligence commoditized and bought on chain. Anyone around the world could get access to wealth management that allows you, as mentioned earlier, to maybe beat inflation and step the preferences that you need. So this is the really exciting part for me as well, opening up financial access in a really composable way.
Very diverse perspectives. I like it. So Gemma, prediction agents are already live on OLAS. There's a lot of focus when we talk about capital markets on trading to make money. But how does prediction differ? Is it still ultimately a money-making goal? Or are we doing something else here? Are we extracting intelligence in some other way?
Yeah, very interesting. So maybe I'll start by just an overview of how the prediction agents work so we can say kitchen on us. So as I said, on all this, we have agents that you can earn yourself. And so they're represented whether SAFE on-chain, they have your own agent NFT. Currently, the easiest way to do this is by an agent app store. And then we have agents buying and selling each other's services by some P-Fluid marketplace. So in the prediction agent case, you come to your article, you turn it on, it begins doing stuff. So actually in your background, it's multiple different agents working together in a multi-agent system. So you have one agent which asks the question about the future. For instance, will Vitalik sing on stage by the end of DevConnect? You get to the end of DevConnect, if you see to be sing, yes or no. So it's a very kind of finite question to answer. You have a different agent which then thinks about its answer to this question and decides how sure it feels. If it doesn't feel sure enough, it can just not take a bet at all. If it feels reasonably sure, it can place its net bet. And there'll be another agent which counts on the closest in the market. So you have these agents working together to place lots of bets. And over time, they're right or when they're wrong, something like 70% accuracy. And so the user gets value there held in its own agent same. So it's always for auto funds by it being right most of the time. So I think there's very interesting user value for like just cold hard cash. But as I was saying, prediction markets can be so much more. You know more about this than I do as your background. Of all the interesting things that could come out of this, the agents are actually producing so much data And this is a case across prediction markets, not just ours, right? Where we're seeing like how to make the decisions, how are they more right than wrong, and then really like shaping questions of how do we predict the future. So I think you could train an AI model on only data that these agents are putting out. That's not our focus right now. We want to make agents be multiple to use as an end user, but there's so much that can be learned from prediction markets.
Okay, so for money making, but next step, intelligence is to extraction. Yeah. Evo, you do something. Evo, you do something so directly money making as well, or looking for yield. What do you think of when Gemma talks about prediction agents?
So I was going to say what we do is kind of like low-key money making, not specifically with the trading goal. Honestly, I think...
I got you mixed up with what Renç, sorry.
Go ahead. Okay, so continuing on this, I don't believe that AI agents are mature enough for trading specifically at the moment. They kind of are, but I'm going to tell you my perspective, our perspective. So essentially what we do differently is that in ADEX, the agent doesn't have its own separate wallet entity, but instead integrates with your wallet, which is pretty unique, and it directly can act from your address. And this is made possible by recent developments in account abstraction and EAP 002 in the last upgrade of Ethereum. And the cool thing about this is that it unlocks new use cases. And the new use case in this case is just demystifying DeFi and authentic and just making it lazy. Because you might not know that the best opportunity for you right now is to put all of your collateral, all of your Ether as collateral on Aave, get some loan to bridge that loan to a new chain in the hopes of getting an airdrop for that new chain. This is all like very tiresome and very annoying and frankly scary for people who are not into Web3 and they're not airdrop hunters. They haven't been through the DeFi summer of 2020. It's frankly scary for them to do all of these steps. So this is where the agent comes in.
Okay, I have to ask, do you think you're creating an arms race between the protocols we're trying to avoid, people who are just using AI to move money around, get airdrops, and the people who are moving the money around, get airdrops?
Absolutely, but as I said, the cool thing about this is that it's not its own wallet. It acts on your wallet, so it acts on your behalf. So in that regard, you're not sibling an airdrop, right? You're not like making 10 wallets in the hope of getting more tokens. You just have your own wallet. Like individual, the agent may decide that to distribute your funds, but we can control this. So we can keep your funds in your own wallet, and in that way, we're not crazy collapse spreads. But
Okay, so you're not using a billion farming addresses.
it's not for abusing, it's just to replace what you would otherwise do as an honest user. But make it easier.
Love it. Okay. All right. Guys, how do you say DeFi but with an A at the end?
No idea, guys.
It's still DeFi? DeFi.
Yeah. You have to say it with a French accent.
Okay.
It's like,
Evan?
Yeah, I think it's decentralized AI. That's what I say. It's easier. But can I riff on the prediction market concept? So who here has read Robin Hanson? Has anyone heard of Robin Hanson or the concept of future arcade? It's a really great read. It was written, I think, in the early 2000s. It really predicted kind of the economics of prediction markets, where markets act as better future indicators, and that enables like humanity generally to more accurately forecast the future. So prediction markets give us better signals than bowling, and agents don't necessarily just need to trade these markets. They can actually use these signals as information to make other informed decisions within the context of like a chain tool call prompt response. And so you can imagine an agent that, wants to make a video of a coffee, right? Maybe for an advertisement. And they might want to know like, what's the chance that it's going to rain? Because I could want to make a video with rain in the background, or if it's sunny. But there's a prediction market around that. If that is an example, the agent can use that input to make more informed decisions. And so trading is a great use case for agents, but also the signal where the market's trading at can also be really useful for agents in their decision-making capacity.
Love that. Yeah. Okay, next one. DeFi promises, it's promising yield, right? Or promising yield. How what are we doing? I don't know if you use an direct this one to you, that, but what are you doing to make the whole process more trustworthy? How are you reducing risk for users? And I think, it's pretty scary to put your money in the hands of an AI agent to trade for you. What are you doing to make that easier?
Yeah, it's a really good question. I recall Renç's talk earlier about people getting triggered whenever they hear about agents managing their money. They think about things like hallucinations and losing control of their assets. And as we discussed, there's been a lot of account or structure development and wallet development has allowed you to, one, have control over the wallet and the assets and just delegate some permissioned movement of the assets by the agent, and then two, also put in some limits on what the agent can actually do. At the same time, there are multiple different companies that are building in this space, and if you speak to any of them, they will tell you that they are the best agent of the space. And right now, there's no one actually looking at benchmarking each of these agents and seeing which ones are the best across the industry. I think Recall are doing some really cool stuff. They're focused on more internal traders. And what we're doing is looking at stablecoin agents. So we think they are the best performing agents right now when you look at the sustainable yield and risk adjusted. And
Can you elaborate? What's a stablecoin agent?
I mean, you could actually pass this one on to Renç.
Yeah.
Stablecoins in itself is a super complex asset class, right? I think if I ask the room here, do we think stablecoins are stable? Probably the majority of this is not going to be yes. So it's like it comes with inherent risks, whether in terms of defects, whether in terms of collateral, whether in terms of the lending markets they operate on. Yet, it is an olive branch that God gave to blockchain. Then here, you guys that messed everything up until this point in terms of user adoption, in terms of accessibility, in terms of democratization, as Nathan mentioned, because I think that's one of the core things. Like we set up DeFi when it first originated to be like finance for everybody, and somewhere in the middle, it got lost and became like finance for a few people who can manage all of this complexity and actually know what the APIs are. Because democratizing finance no longer means that you can have like an inflationary digital asset in your wallet. Like it's not democratizing finance. Democratizing finance is how can you provide alpha to everybody deserves it without having them to go through this burdensome process. So stablecoins is this olive branch that God's given to us, where they said, you guys have minimized who can access DeFi and the infrastructure that we are provided into a place where we can only serve a handful of people. Like the retail DeFi is extremely fuzzy for me, like who can actually use it. But stablecoin is something that everybody can understand. And we had the responsibility to make it as accessible and as easy and as risk-free as possible. Because if we don't, we're going to fall into the same pitfall of like serving much a couple of curators and users. So the agent, the stablecoin agent, is the answer to how can I invest in stablecoins. You bring your dollar or you bring 10,000 USDC and you give it to the agent, and the agent asks you what you want to accomplish, what is the risk parameters that you're looking for, what is the exposure you want, which collateral you want to use, which market are you trusting. And once you set those parameters with the primitives that Ivo mentioned, like the account abstraction and the session keys, where you provide non-custodial safe automation to the agent then runs your stablecoins for you, getting you the best yield, the best risk-adjusted yield that you can on the market. So that's what a stablecoin agent does.
And you're talking about yield on the stablecoins themselves.
On the lending markets, like yield-bearing stablecoins is also like a whole another complex. They might also get super.
But not swapping into other tokens for you, not trading like that, just maximizing what you already have.
No, it's like the idea of an agent who can trade speculative assets on your behalf and be successful is a problem that cannot be solved right now. If we were able to solve that problem, you probably wouldn't see me here. Like I'll be just like using my agents to buy the dip and set up the best strategy is like buy low, sell high, like a creator and an agent that does that. But it's an extremely difficult problem to solve to understand the market yet, but there are, narrow, more defined corners and spaces in the market where you can implement intelligent and it will give you a great performance. And those are the areas that we focus on. So the stablecoin agent is not working on the yield bearing stablecoin assets, but it's working on the lending markets where there is stablecoin yield, and it gets you the risk adjusted yield that you can.
That's really helpful because I think a lot of the first thing that comes to mind when we talk about agents trading or managing portfolio or anything is what you said is kind of impossible to do right now. So would you say that if someone's trying to sell you something that can swap and trade and do all that for you, that you should run the other way?
You should take it with a grain of salt, I would say, because there's also this idea of trading agents and me making you money, just giving you your money, I'll trade your assets for you, kind of promise is sometimes too good to be true. And in life, when things are too good to be true, they bite the hard part, And it's important to understand how an agent stays profitable. If you're talking about agents in finance, there is a really critical amount of cost that goes into the operations of the agent. Every swap that it's made, every asset that is evaluated, there is a cost associated to it. So if I swap your USBC into Bitcoin, just not taking the Bitcoin price into calculation, but the cost of that operation is something the agent has to work to justify. So that's why it's also super difficult to do it with a speculative asset, because the agent might think, I'm going to buy Bitcoin at 93K and I'm going to swap 5 million tokens, $5 million of USDC on mainnet, and I'm going to have $100 of cost. The agent is down already $100. So that it needs to work constantly for you to make the $100. And if the Bitcoin price drops, that the agent has lost all of his capabilities and is shackled. So there's inherent problems when it comes to intelligent and speculative asset that needs to be solved before we can talk about someone that will take your money and trade it for you. So if someone comes to you and tries to sell you a trading agent, I will say question is.
Yeah.
Yeah. I do think the space is evolving though, as agents and language models have increased reasoning capacity, and as that exceeds human levels, they can have larger memory context windows, and all markets are fundamentally based on asymmetric knowledge. And so if the agent can scour the internet and find some asymmetric knowledge and trade off it, maybe in the future agents will outperform humans. And my kind of spicy take is, 10 years, 20 years, 30 years, at some point, it's very likely that agents will have more assets under custody than humans. I think that's an inevitability given the rise of agentic intelligence, brother.
I think this is 100% correct. But for agents to have more assets under management than humans, they don't necessarily trade. They have to trade speculative assets. There is low risk DeFi that Ethereum and Aave and all of these things are built on. There's great things in DeFi that doesn't require you to speculate your life's worth. If you just do those things, we can slowly, gradually get there. So today, we have made billions of volume on DeFi, moving people's capital and imbalancing for them. It is already a great start. We don't need to go from 0 to 1 and 100 immediately. And also, it's also important to understand, intelligence has been on financial markets for decades. The traditional finance has been running on traditional algorithms, intelligent algorithms for a very long time. So just taking those algorithms and moving them to DeFi, where we have huge amounts of inefficiency, is already going to be a huge leap forward. It's already going to create capital efficiency. It's already going to create discipline in decentralized finance markets, which I believe, very much lack. And I think there's insane amount of potential. What we can do today, what we have been doing in the past few months and next weeks and months, and all people in this pattern has built great tools and great infrastructure to make that a reality.
Yeah. Just bouncing off what Renç was saying about low-risk DeFi. When a lot of people think about the current DeFi market, they don't actually apply a lot of the governance and risk protocols that are in the traditional market at all. And this is something that we've been looking at quite intensely, and slowly but surely we're moving towards that. Stream finance really exposed this quite heavily, where you had a stable coin which had multiple creditors with different junior and senior debt obligations, that the holders of these assets had zero understanding of who would get the assets recovered first. And so one of the main things that we need are these like credit engines that explain the risks of all of these assets that people are involved with, so that people have an understanding, okay, maybe this curator gets their assets before I do, and they'll be able to be comfortable with that risk, and if they're not, they but go into that asset. So I think that's one of the first big things that we need to sort out on our risk side when it comes to scaling up the capital that comes into this market. Another side is confidentiality and verifiability of the risk as well. We've been working with some great partners in the space, such as Giza, Sale, and the like, and they need confidentiality of the algorithms that they're creating, because at the end of the day, that's their source, right? And we're slowly starting to include a bit more privacy into the space. We've got players like Oasis, we've got players like iExec and iCloud that are created TDEs where you could have or host algorithms which are confidential or verifiable at the same time. And so it's really, really great for us to be moving in the direction of both risk, verifiability, and confidentiality, which we can connect with the next Core 2 rails as well, if you really want to tap into there as well. And then also insurance. So DeFi has had a massive insurance issue for a very, very long time. And in the traditional finance, everyone has, well, in the US has FDIC insured accounts, right? Where if something goes horribly wrong, there's at least a level of money that they can recover. And so when we're ushering in this agentic economy, it's not just about democratizing access to these financial rails, but also democratizing access to the same type of dark rails that we have in traditional finance. We have the technology to do that. It's just about orchestrating it in the right way.
Yeah, I would like to know very many different perspectives on guardrails. So I think there's a few different things that you can do structurally on this question of like, how do we trust these agents? So one of them is actually, in contrast to the privacy element, transparency. It can be very difficult in Web3 to tell if the numbers that you're seeing have any real basis. And so one of the, like for instance with ours, we throw on this number of like 11 million transactions made and 10 million about the prediction markets, right? It's very easy to say these things, but that's actually numbers that you can go and see on chain. You can actually not only see the transaction that's made by the agent, but you can also go and see why did it make that prediction? Like what was the question that was asked? How did it feel about the question? What did it do as a result? So I think there are times when privacy is the answer, and there are times when transparency is the answer, and it's kind of a business by business situation. But I think there's something that need to be said for seeing like what can I actually verify with my own eyes. Another big structure that you can do with agents is have a multi-agent system. So again, in the case of the prediction markets, it's not just relying on, so in the first case I was talking about, you're kind of relying on the business or a person that you trust to hope that what they're doing in the black box is what they say they're doing. Or, you know, you have to answer this question here for ways. If it's in the open, it's a bit easier. If it's a single agent system, you're having to trust one agent, that one agent does what it's meant to do at the right time and makes the right decision. So another way structurally that you could kind of answer this question and mitigate the risk is by having multiple agents weighing in. And a third way that I think is interesting is the protocol level and kind of governance stepping in. So for example, we have staking, and what that means is on protocol level, these agents are doing useful things are assessed. Are they actually doing useful activity today? Did they make it today? Did they make it the next day? If they aren't like providing useful activity, they get kicked out and they don't earn their staking rewards. That's quite simplistic right now. Either you did for useful activity, you get your staking rewards, or you didn't, and then you get kicked out for a while. but you can do much more complex things. Like as a protocol, and we can say, well, we don't want to be funding staking always to this kind of agent. We're not so sure about what it's doing, or we think it's harmful or whatever. And so you can have much more complex and things that taking place here. So multiple levels. But yeah, transparency and not how to trust kind of humans, not how you trust a single agent, and then kind of taking some kind of collective responsibility structurally via protocol, for example.
So I have a lot to say here, and then try to be brief. So first of all, a lot of excellent points were made, but there is this post by Vitalik called AI as an agent and humans at the steering wheel, and it's about futurity, but not only, like you can interpret this post as blockchain that being sort of like the thing that is very complementary with AI, because AI is very non-deterministic, very non-predictable. Meanwhile, blockchain is the complete opposite, completely deterministic, and you can set specific rules. And as I mentioned previously, account extraction is a great technology for that, and very few people actually realize this, but with the EPM and with account abstraction, you can make it such that if a transaction is going to be unprofitable, that it will get reverted, so that a non-profitable transaction or a dangerous transaction will be even impossible to exist, and it will be like impossible to execute this. In practice, this is incredibly difficult because a lot of strategies are composable, a lot of strategies are cross-chain, so in practice right now it's really difficult to do this, but it will be at some point in time. And when it comes to touching upon like whether trading strategies are dangerous, and yeah, obviously agents cannot predict the market, and this is something extremely like arcane and magical and almost impossible to exist, because markets in themselves are kind of like, if you were able to predict them, then they wouldn't move the same way, so you wouldn't be able. It's kind of like the secret of dependency. But there are some edge cases to this, like there are delta neutral strategies, like for example oasis trading, where you can short one asset on perps and then buy it spot. So this is a good example of buying and selling stuff but staying delta neutral and still making money in a relatively risk-free way. Another example is like using a lot of collateral to get a very small loan and to generate some big interest on that loan, and this is something that a lot of vault protocols do this right now without agents though. So there are some exceptions to this, and obviously with prediction markets, there is a lot of things you can do with asymmetric bets, where at the end they is almost like guaranteed to be profitable. So there is a lot of edge cases to this. But yeah, classic trading, obviously, we don't have the skill that out. And I don't think we ever will be, because as I said, markets by definition, if you have a tool to predict them, then they will move differently than the prediction one.
Okay. Okay, this is our final question. Let's wrap it up. I want to go through each of you. Tell me something that you're working on today that, if it's successful, will really meaningfully contribute to Intelligen's capital markets development, and who's going to benefit from the most from that thing you're working on. So a thing that you really want to come to fruition that you're kind of working on.
Yeah, as I made the promise of not talking about PC in the beginning of the panel, I will not talk about it, but I think there's like a lot of interesting people on this panel that does really good stuff. Like we work with Bonds Credit because we're introducing a new financial instrument to the world, which is like agents. And every time you use a new financial instrument to the world, the more standardized you can make the credit of that instrument, the faster the adoption goes. Same thing with X402. I think what's magical about X402 is what we want to do is not to facilitate payments, but change what payments are. What payments are today is basically human makes a payment every few hours. That's what payments are categorized. We want to make the payments and every ongoing thing. Like changing the concept of payments is, I think, like financial system. OS has been around for some time. What Evo is doing is, I think, super interesting. What I like to make and what we like to build is, like, I'm quite tired of making incremental improvements to things in Web3. Like, let's fix that a little bit, let's fix that a little bit. What I live and breathe every day is to make a shift in paradigm of UX of finance and how finance is consumed today. And that's what we try to move forward. And that's what I would like encourage everyone in this room to go towards. You travel these hours and hours to come to Buenos Aires. Don't settle for something like an incremental improvement. Don't like this is to reduce their profits. Like, take optimistic and embrace the innovation that we have today, embrace the technology what we have today, and understand what can be achieved today and what can be achieved tomorrow. And I think if we will all make great things together.
Well said. Yeah, so I'm obviously pretty excited about Explorer too. My really kind of big audacious goal is to kill the API key, to make every API accessible with an on-chain USDC payment. That's been kind of the explicit goal of Explorer 2. If we can enable that, then we open up kind of the traditional world to on-chain commerce, on-chain finance. And it's starting to happen. We already have AI native players like Firecrawl, FreePick, even browser-based, which lets you spin up virtualized browser sessions, take screenshots for debugging and other use cases of the agent space, now accepting USDC payments for their APIs via Explorer 2. This increases the intelligence capacity of agents. The more tools the agents have, the more aligned they are with user intent or prompting. And I'm excited to continue to watch this space grow and enable USDC payments for any HTTP-driven requests at the lowest level of the internet stack.
So before I go into my answer, my take on Explorer 2, because I'm not sure we made this clear for the audience, the coolest thing about it is that agents can one day discover data on their own. This is something extremely powerful and something that is not possible today without human intervention. Anyway, so I mentioned already about ADDX, but I'm also working on a word called Umpire. I hope some people in the audience use it. And both ADDX and Umpire are extremely complementary because I also like the idea of not doing incremental improvements and changing things like in a revolutionary way. And I believe that Web3 already is this because the composability that you get in Web3 you don't have in Web2. Like, it's not possible to have the same account and to have like a non-fungible asset representing your house. This will be possible one day and get a loan from it through Aave and to use the money from this loan on a Forex exchange to do like the delta neutral strategy and generate yield. Like, this composability of using the same assets in the same account across multiple applications is something that Web2 simply cannot do. The thing is, it's way too complicated though, and a handful of people understand it. So this is where ADDX comes in and demystifies this, and it makes it as easy as one click, like enable the agent and tell it what to do. So this is what I'm excited about, demystifying Web3 and exposing this revolutionary change to everyone versus like the people in this room and the 40,000 attendants of DevConnect.
Yeah, so what am I excited about going forward? I think this is a really, really exciting time to be in this space, in this room. Maybe you've been to previous conferences, previous years of agents events. Maybe this is your first one. But I think as much as saying, as Elodie and Manon has shared about their own project, share about others, there's such exciting things being built. There's such serious things being built. And it's really, really vitally important that we are in these rooms discussing this, because it's not a case of will agents arrive, will they be doing important things. They're already here, they're already managing incredible amounts of assets that are already changing the way these markets work. And so with really fixing vital questions about what economies will look like in the future, and there's it's very real possibilities where the role of humans is not serving us. So I think I'm excited that there is so much serious things being built, in these discussions being kind of your interest. And we've actually got an event on Tuesday where we'll be sharing kind of our answers and how we think we want to ensure that humans play an important role going forward. But there'll be so many other expert panelists just like today, and some same speakers actually sharing their own perspectives. And yeah, I think for us specifically on what we're building, our answer is to try and enable everyone to find their own agent via this app store. You've come and try this, and we're funding your free agent fee to give it a go. But don't just adopt the first one they see. Come and hear what everybody has to say, and yeah, come talk to us. I'm sure everybody has a lot of time for hearing what you're excited about, answering any questions that you have. So yeah, thanks for having us.
Yeah, and last but not least, I'm really excited about building a credit union bank for agents. So like When we had the Industrial Revolution, it was Moody's that gave the credit ratings of things like railroads and bonds that allow a new credit layer to exist. And right now, agents, we don't see them as software. We see them as economic actors that are going to be delegated a lot of our work and allow us free time to spend more time with friends and family. I started picking up the guitar again the other day because of stablecoin agents. I don't know how to farm them every day. And so by having this credit layer for agents, we're going to start with the product market fit, which is stablecoin agents. But we really see in the future that we've got things like Neo, right? Neo, the robot, they're all going to have their own agent crypto wallets. They're going to need a place to bank. We're going to have deep in infrastructures in this room that I see in the heating that need to do X402 payments to get data and send data. They're all going to have their crypto wallets. It'll be great for all of these agents to also have banking infrastructure through the credit layers that we're going to be able into. Crypto agents as well. They're going to have their crypto wallets too.
Amazing, and on an optimistic note, thank you all. This was really, there's some panel. Have a great rest of the week.
Where do you go?